this video, I'm going to show you the exact process that I would follow, knowing what I know now, to restart my trading career from zero. All right, I've been trading for 8 years now, and I'm completely self-taught. And while that did give me a unique perspective and edge on the market, I wasted a ton of time and money that I really didn't need to had I have known what to actually focus on. So regardless of if you're already trading or you're actually starting from zero, this video is going to serve as a consolidated checklist of all the most important things to focus on to succeed in trading. So I'm going to outline the critical first steps in planning I wish I did before I even touched actual trading, what I ended up actually needing to learn, what softwares and tools you need to get started, and most importantly, how to access capital, being able to start with a small amount of money, and then how to put all of this together so that at the end you'll have the simplest, fastest path that I would take if I had to start my trading from zero again. So if that sounds good, make sure you hit the like button on the video, subscribe to the channel, and turn on the bell notifications so that you know when I post videos. Check us out on Instagram, Discord, and TikTok. We have an amazing trading community. So step one is probably the most critical step of them all, and a lot of people sort of approach this wrong, and that is wanting to hop into an exchange and start placing orders before you even know anything about what you're doing. All right, this is like having medical students that want to become surgeons learn how to do that process by just hopping into the operating room and dabbling in doing open heart surgery. Okay, so the first thing that you should be doing is educating yourself while you're saving up money. And the cool thing about cryptocurrency trading is you really don't need that much money to get started. So you can be saving up this capital, and even if you want to start paper trading while you're learning to get the reps in, you can be stockpiling that money away. All right, even if you're saving $5 per day and you can manage to save about $150 per month, and you do that for 3 months while you're learning, you're gonna have around $500. But with what I'm gonna show you, and the cool thing about cryptocurrency trading is you'll be able to trade with up to $45,000 at that point once you have your proven process, okay, so that you don't need that much money to make your trades actually count. Okay, most people overestimate what they can do in a week or a month and underestimate what they can do in 6 months or a year. Okay, saving up the capital and educating yourself first is the most critical part. All right, so let's hop into education. The first thing that every trader in the world, and I'm going to stand by this, should be reading is a book called Trading in the Zone. I didn't read this book until about 1.5 to 2 years into my trading career, and this is where I actually started my process. So you can go ahead and learn whatever you want online, start trying things out until you understand the concepts that are given in this book. I assure you, you will not succeed in trading. This is the foundational layer that every trader should start with. Had I have started here, I would have shaved years off of my trading, and I would have saved thousands and thousands of dollars. So this is 100% a worthwhile investment. All right, even to this day, I listen to this book on audio recording about once a year just to keep all the concepts fresh. Okay, so once you understand these concepts, then we need to approach the chart and start thinking about what is discussed in that book, but looking at it in a visual representation. So once you know how to think, now we need to start playing around with the charts and putting that to practice and understanding how to start quantifying some of these concepts. So I use TradingView. I have a great video showing all of the nuances and details of how to set this up, all the features, and exactly how things work. Okay, but simply put, these charts are going to show us collective buy and sell decisions that are happening in real time. So our overall goal as traders is to use tools, analysis, and probabilities to find areas in the chart where we have a higher probability of one thing happening over the other, and then be able to make a profit when the move does happen while keeping our risk contained. And in doing this process, there are two main statistics that are the most important to understand, which is winning percentage and average risk reward. So what percentage of the time are you right about your trade idea? And when you are right, how much money are you making versus how much money you are risking on the trade? All right, so in this situation, since we're entering the market here and we want the price to go down, if the market is to come up to this direction and hit this level, this is going to be 1 unit of risk. These are what we call risk factors. Okay, so say we start with a $450 account. We're right about our trade idea 40% of the time, and we're making 2.5 what we're risking on the trade if we are right. Say we're risking 2% of our account per trade. Okay, over 100 trades, you could still end up with your account at $715, starting with $450, nearly doubling your account in 100 trades. So say in the sake of this example, if we can use analysis and patterns to figure out when this level will be hit before hitting this level, we can make 3x the amount of money that we're risking if the price comes to here before it comes to here. So if we're risking $100, we can go ahead and make $300, which would be a 1 to 3 risk reward. So even only being right 40% of the time, so less than half the time, at a 2.5 risk reward ratio, even if you have 1, 2, 3, 4, 5 consecutive losses in a row, you can still end up increasing your account to 715 from 450, even being wrong 60% of the time. This is why it's so important to understand the mindset before you start executing trades. I remember people would always ask me, how did your trading go? And I'd say, oh, well, you know, I lost trades today. And they would be like, oh, what happened? Are you okay? Like, what can you do better to improve that? And this is what we drill into the premium team's heads. Taking trades is simply opportunity cost as long as you're following this process as closely as possible. If we look at this example over here, all we need to do is figure out whether we can have this price level be hit versus this price level being hit first 40% of the time to make that 2.5 risk reward ratio. So if we're risking $100, we're making $250, and we can have this consistent growth in our account as long as we're adhering closely to that process. And you can see with what I'm about to show you, as long as we have this process refined and we master this process with a small amount of money or practice money when you're first learning, okay, we'll be able to use leverage to be able to increase this to $45,000. Okay, and this is exactly what I'm doing on a regular basis when I'm taking day trades, and I'm able to make $2,000, $3,000, $4,000 in a single day trade. It's about learning that small process, mastering it, and then working over time to scale it. All right, so in order to do this, the goal is to learn about how the markets move so that you can start quantifying these moves using different tools and be able to create that repeatable process for yourself. All right, so let's take a look at an example of setting up a trade where we can position ourselves in these high probability situations and apply all of the math I just showed you to be able to actually follow this process correctly. Okay, I have tons of videos showing different ways of doing this, all of the different systems. I'm not going to go into crazy detail explaining this one. There's other videos that you can check out where you can learn exactly how we do this. All right, I'll link that in a card at the end of the video so you can watch that afterwards. Okay, so say we have a trend line here where we have the price gradually moving up, and now it starts to make a new move to the downside. Okay, I can then use moving average crosses to be able to figure out when we have a confirmation of the beginning. So if I have all three of these moving averages in line with one another, this can confirm a new trend direction and allow us to be able to take a proper trade. Okay, so the next thing that I can use is something called a Fibonacci retracement. We use these on tons of different systems. Okay, and there's different settings you can use, but in this situation, okay, I can find this new local high here, go back up to this most recent high here before we got all of our moving average crosses, put my 0.17 Fibonacci level as the stop loss, put my 0.382 Fibonacci level as my entry, and have my 1.272 as my take profit. Right, so I can enter the market there, place my stop loss at this level because I know statistically speaking, there is a higher chance based on these other criteria before this level is hit if we have the confirmation in downtrend. Okay, and in this situation, we would actually make a 1 to 4 risk reward. So if we're risking $100 on this trade, we'd be making $400 in profit. So then from that point, we can lose 3, 4, 5 trades in a row, and you start to not even care because you understand that when you do win, so long as you follow that process, you make substantially more than when you're losing, and you can continue to increase and compound that account. But this will only work if you're taking a uniform amount of risk per trade, because that's the only way you're going to maintain that statistical consistency that is required for trading. I see a lot of people just saying, oh, I'm going to risk 50 bucks on this trade that I like, or $150 on this trade because I like it more. Say the one that you like more, since the markets are random, you lose, then you make a full profit on the $50 risk. Now your risk reward is completely thrown off and your whole system is compromised because you're not keeping your risk uniform. Okay, so there's a way we do this. I'm going to show you the math behind it. Then I'm going to show you a simple way that we've created on the private side of our trading team to be able to add this right to your chart, do the numbers automatically so that you can do this really, really quickly and efficiently. Okay, but I want you to understand how it actually works first. So in order for us to risk, say, $100 on this trade, what we need to do mathematically is take our entry level, right, which is 3924, subtract that from the stop loss value, which is going to show us the distance the price will travel if we are to take the contained loss. All right, that's going to give us 2316. Now we're going to take 2316. We're going to take the dollar amount we want to risk, so in this case 100, and divide that by 2316, which is going to give us what we need to enter here in order to risk that amount. Okay, so if we enter here with 4.3 and this is able to travel against us, that's going to give us $100 loss. Now, sometimes this can be hard to calculate quickly, even though sometimes I do this just with a calculator when I'm taking trades. Okay, so we designed something called the Innovatrade position size calculator, where if you click on that in your indicators, okay, you can actually add this to your chart for free. If you join our Discord and you go to the tools and resources section here, it's all going to be in here on a PDF that we'll send over to you and you'll have it on your trading view. Okay, but basically you can go in, click on the Innovatrade position size calculator. It's going to say put your entry price, your take profit price, and then your stop loss price. Then you're going to put in your dollar amount risk. So say $100, hit apply. And that's going to show you your potential profit, your risk reward factors, and then the quantity that you need to enter on the exchange. Okay, so say we have another example of this where we have a trend break here. We want to take our Fibonacci from here to here. We're entering the market short here with our stop loss at this value, with our take profit at this value. You can see that also over here would have gone full profit. We can then click into our indicators, go into our position size calculator, click on the entry price, click on the take profit price, and then click on the stop loss price. If we want to risk $100 on this position, we can go ahead and hit apply. That's going to show us the quantity we need to enter the market with, as well as the risk reward and the total amount of profit that we can expect to make on the trade if we are right. Okay, and you can see for this trade example, this would require 8.67 Ethereum times the entry price, which is going to be 3,921. Okay, so that's going to mean that even if we're only risking $100 on this position, we're going to need about $34,000 in order to facilitate this position. This is where leverage comes into the picture. This is the beautiful part about cryptocurrency and why leverage coming to the picture can very, very quickly expedite the growth process of your trading. Okay, so if we head over to our exchanges, I like to trade on Bybit, but depending on where you live, you may not be able to use some of these exchanges. So I find that Femex and Bybit give us the opportunity to have high leverage on these tokens, but decent enough liquidity to be able to take the trades that we're taking. But what this is going to do is this is going to allow us to not need that $34,000 in capital, but still keep the risk at 100. Okay, so if I set up this trade example on Bybit, so we have our limit order here. I type in 39.24.61, order quantity 8.677, set my take profit here 1.38. You can see this position without leverage is going to cost us about $34,000. Now, what we can do is we can increase this leverage up to say 50. Okay, so if we go ahead and confirm that 50x leverage, we're still risking $100 on the trade. Nothing has changed about this trade. The only thing that has changed is now you only need $700 to put into this position opposed to $34,000. Okay, so if we increase this to 75%, now this is going to drop our position requirement down to $485 opposed to $34,000. Now, you are paying more fees when you use higher amounts of leverage. So it is ideal to use a modest amount of leverage and start small with your trading. Okay, because depending on what percentage of the fees that you're paying into the exchange, that's still going to be based off of the total cash position size of the position, not only the amount that is required for the trade. So there are higher fees when you're using leverage, but it is a good way to be able to allow you to start with a smaller amount of money, still risk a safe amount of money. So say you're risking $25 per trade on a $1,000 account. Okay, you can still do that, but you won't need $30,000, $40,000 to do it. So the same situation is true on Femex. You can see this is going to cost us about $34,000, but if we use 50x leverage, now our cost is only $720, and we're still only risking $95 roughly on this position. Now, there's something important that a lot of people don't realize about leverage at the beginning, which is something called liquidation price. Now, if you put in your 8.677 ETH and then input your entry price, this is going to show you the price in which Ethereum has to move in order for your position to get liquidated depending on the amount of leverage that you're using. So you always want to make sure that your stop loss value is inside your liquidation level. So if I go over 38.65, then you hit calculate, that's going to show you your liquidation level. So if I take 39.82, in order for my position to get liquidated with 50x leverage, the price would have to move up to this level. So my stop loss is going to get hit before my liquidation level. Now, if I were to crank this, say up to 100 and hit calculate, that's going to now drop my liquidation liquidation level down to 43, which is still outside my stop loss, but you can see if you're trading smaller positions, you want to make sure that you're not going to get liquidated before you place your stop loss, so you can let your positions play through and so that you're using a safe amount of capital. The only way to improve your trading and be able to tell your winning percentage and your average risk reward is by tracking your trading so that you can optimize your performance. So what you can do on TradingView is you can actually click this little camera button up here, hit copy image, and then you can go over to a trade journal. Okay, this is a custom trade journal that I made. The link to that is also in that resource document on our Discord if you want to use this for yourself. But you're going to click on this cell here and paste that image in. Okay, you can go ahead and resize it accordingly. Okay, so then you can input all of the criteria. So you can put in the date, the ticker, okay, whether it was long or short, and then you can go ahead and put in your P&L, and that's going to automatically make it green or red. Okay, this was on a 10-minute frequency, and that is automatically going to update the amount of wins, losses, total trades you took, your winning percentage, and then your total account P&L. All right, which is also going to show you on this stats trading tab here, all of your longing statistics, your average win, average loss size for your longs, and your average shorting statistics, so your total P&L going on the short side of the market with your average win, your winning percentage, and your total amount of trades. And this is going to give you those metrics, those winning percentages, and those average risk reward, and also allow you to be able to go at the end of the month, take all of the images of all the trades that you won and all the images of the trades that you lost, and optimize your process over time. So if you notice something about all of your losers, okay, and you can slowly work towards, say, a 55% win rate at a 2.7 average risk reward, say risking $25 per trade. Okay, say risking 2% of your account per trade, so that as you're scaling your account, you're also getting better and better at trading to optimize the total process as you go. All right, and the cool thing about TradingView is while you're trying to optimize this performance, you don't have to put real money on the line to figure out how to become consistent so that you can then inject the capital into it, because TradingView has this feature called bar replay, which if we click this button right here, we can go back on the chart so that we don't remember what happens, and then you can go ahead and play this forward and take the trades that you want to practice in real time. So if we wanted to take a trade, say we draw our fib from this level down to this level, then I could sit here with headphones. I could put my entry here, my take profit here, my stop loss at this level right here, play this forward. And since I don't remember what happened in the past, this is going to put those reps in to see if things do work out. So, okay, and you can see that would have gone full profit. We did miss that trade by just a hair there. But once again, you can put the reps in to be able to practice this system so that when you're going through the motions, you already know that your process works. You know exactly how much money you want to put in, the growth rate in which you should be expecting to be able to get the results, so you don't have to waste a ton of your time trying it in real life, trying random stuff and BSing around it. Okay, and this is exactly what we hone in on the private side of our trading team. You can see one of our analysts right now is doing a TCL Ultra session. We got 46 people in there learning one of the systems that we're working on. Okay, you can see Crucio taking a TC1 trade here, entering short here, quantifying his risk, and then taking profit perfectly at the bottom of that level. Big shout out to you. Okay, and one of the new systems that we're working on, 24 wins with 1 loss. Okay, this is what we're going to be releasing to the world fairly soon, so stay tuned for that. But we have people 4-5xing their accounts in the matter of a couple weeks. Okay, so this is absolutely wild. A big shout out to you, PJ Pan. So congratulations on that. Okay, once again, PJ Pan now 26 wins with 1 loss. All right, and we just have a ton of members that are absolutely crushing these trades and implementing all of these best practices. But anyways, I just wanted to make this video as sort of a consolidated version of all of the necessary things in the order in which you should actually learn them. Okay, right here is a more detailed list of everything I would recommend learning in order. I'll pop it up on the screen right here. Okay, feel free to go around the channel and just watch all of the videos. I kind of sprinkle all of these concepts throughout all of the videos to help you guys out for free so that you can get started the right way. Okay, if you're still here and you like the video, make sure you hit the like button on the video, subscribe to the channel if you like trading and investing. Okay, turn the bell notifications on so that you know when we drop videos. But that's all I have for you today, guys. Until next time, I will see you all in the next video.